Ladies and gentlemen, welcome to today's video. Hope you're all well. I wanted to get vulnerable with you today and talk about something I'm actually going through right now. And this is very important because it's my role at the end of the day, it's my responsibility to talk about these things as I'm going through it. As someone in the space who, let's say, has an audience, it's my responsibility to talk about the realities of how actually trading is, instead of shying behind something. Or quite often what we see on Instagram is trading is perceived as this kind of rich kid thing where you're always flexing on Lamborghinis, all this kind of money all the time, whereas it's not necessarily the reality of trading itself. It's just that's the glamorized side of the space, and I don't really associate with that side of the space. If I'm just talking about myself and my own journey, I more so talk about the actual work that's involved in trading, the things that people don't see, the breakthroughs, but also the setbacks, the ups and downs. All these things are involved in the trading, and it's important that we talk about this. So the reason why I'm doing this as well is that if there's one person watching this, or there's a few people watching this who are going through this right now, or will go through this in the future, this is something you can go back to and gain confidence from, that this is just a part of the journey. So hopefully this helps, hopefully this provides value to a few of you, and let's talk about it. So overall, if we're talking in terms of quarters, Q3 was pretty incredible, solid quarter overall. October, because we're still in Q4 right now, October, solid month, not as high as September, which is completely fine because I do not control the market and I do not control the outcome of the market either. So you can't put expectations on month to month or quarter to quarter. Overall, October was a solid month. November, however, has been a bit of a drawdown month for myself. So far in the past 5 trades, I've taken 4 losses and 1 break even. So it's one of those things where if you have 1 or 2 years experience, you might look at that and be like a bit panicky, you might be a bit worried, like why have I taken 4 losses in a row? But at the end of the day, all the trades that I've looked back on that I've taken over the past month or 2 have fit the plan. I make very few mistakes now in terms of the trades that I take. There may be a couple tweaks here and there that I need to fix and look over and monitor, but overall there's not going to be anything significant that I need to look at. It's just monitor. But what I'm trying to say is that sequence of wins to losses, you do not know the outcome of your entry model, right? So if you've got a strike rate of 50%, 40%, 60%, even 70%, you still do not know the sequence of your wins to losses. If you have a higher strike rate, you're obviously going to get more wins and more break evens. However, you still don't know the wins of your sequence of your wins to losses. So just because I've been on a period of 4 losses, 1 break even, you can't let that affect your performance or your trading at all, because who knows, the next 2 trades could be 2 winners, and then all of a sudden it's just wiped out the entire amount of losses and suddenly you're in a profitable month. So it's important to not judge it by month to month, and also not judge the trades that you've taken before the month has even ended, and same with the quarter as well. So you can't judge it from that perspective, and this is why probabilities are super important. It's important that you actually understand that, and it took me a long time to actually understand and properly accept probabilities, because you think you know it, but overall it takes a lot of experience to actually be happy with the probability model itself and just let the edge play out. But basically, if I hadn't had experience and I didn't know what was going on, it'd be very easy to start changing things here. You start to look at things and be like, well, am I doing something wrong? Do I need to change anything within my trading? No, you don't. If anything, you need to continue doing exactly what you've been doing and let the edge play out over time. Because if you start changing everything, you're not giving yourself a chance to let that edge, that entry model, that probability model play out over a sequence of trades, and you're doing yourself more damage by changing things, even if it's little tweaks in that period. So obviously adjust, monitor your performance. If anything's off or if anything's recognizable via patterns, then you need to obviously be aware of that, and this is where quarterly reviews come in, this is where monthly reviews come in. But overall, you don't be changing anything significant without that data to back it up. So yeah, overall for me, like obviously four losses in a row followed by a break even, it's not the best month at all. It's been my lowest month in a while, but overall, like, it's just a part of the game. You just got to respect that. You got to be okay with that before you get into the markets. You got to be okay with that risk-wise, that's why you only risk a certain amount of capital. If you were risking 3, 4, 5% per trade, you're going to be in trouble. Like, you've got to keep your risk tight, whether it's 0.5%, 1%, 2%, whatever it is. I wouldn't recommend personally going above 2%. You've got to keep your risk tight, and you're going to be happy with the risk that you're taking. If you're not happy with the risk that you're taking, you shouldn't be taking the trade. End of. So yeah, let's jump on the whiteboard. I want to show you something because it's really important that you actually understand this from a visual standpoint. Right, an important lesson, because this actually really helped me from a visual standpoint understand the law of probabilities. This is what we have here. So obviously we start off as per usual with a smaller account. Now the goal over time, over a sequence of trades, is to get to a bigger account. That's the overall goal, right? Now, what we have to understand is that these can be mix and match. If you have a strike rate of 40, 50, 60%, let's say, just on average, these could be completely different. You could draw the sequence 10 times, each time you can have a different sequence, right? So on this sequence, you just happen to have 5 losses in a row, right? 5 losses in a row. Who knows, the next 4 free trades could be winning trades, and then this just carries the entire month overall, or this sequence. But the thing is, if you take 5 losses here, and on this trade here, on the 5th trade, this is where you're now overthinking your strategy, you're overthinking things, you're doubting, you're hesitating, and a position on pound yen happens, let's say, and it's a long entry. If you then hesitate, you're doing yourself more damage by not taking that trade, because that trade can play out, banking 9%, and then you're looking back in hindsight and being like, I just messed up my probability model because I didn't take that trade. And then let's say that trade is now a winning trade, right? You've missed it because that's now a missed trade. What's to stop this next trade that you actually do take because you've realized the lesson becoming a loss, right? Now you've just taken 6 losses, missed the 1 winner, you're in a negative month, and now you could repeat the same cycle here where one of these could be winning trades, you miss it. This is how trading actually works for a lot of newer traders. This happened to me for a long time, right? This happens to a lot of my friends who trade as well. This happens a lot. So realize what you're doing here. You have to play the law of probabilities and not start missing out on individual trades, because you can't pick and choose which trade is going to be a winner, which trade is going to be a loss. These trades, they could be the same entry model, the price action could be slightly messier, this one could be very clean, same entry model, and not play out, right? Or these could not play out, be very clean, this be slightly messier and play out. So you just have to let the plan play out, is what I'm saying, right? And something that I also did, quick tip as well, which we can dig into in a different video, and I have mentioned this in the past on a full day of trading series, is this, right? What I used to do is, if I had a period of 3, 4, 5 losses, let's say, what I would tend to do is I would associate the pain of those losses. I don't feel the same anymore, but obviously in time you grow and the emotions start to become less and more diluted as you trade. But back then, I would associate the pain of taking those losses, and I would bring that into the rest of the day. So if I was hitting a workout late that afternoon and I had a period of 5 losses in a row, I'd feel shocking. Like, I wouldn't feel good. I go into the gym and I feel like demotivated. I wouldn't feel good about my workout. I wouldn't feel good about myself. What I was basically doing is, which is a common thing once again, which I see in a lot of people, is you're attaching your self-worth and your self-image to the actual trading results, to your trading performance, which you shouldn't be doing. Someone actually told me this. Someone pointed this out to me, and it was a good lesson for me to have. Whether you take 4, 5, 6 losses in a row or 4, 5, 6 wins in a row, it should not affect how you feel about yourself, shouldn't affect the rest of your day, it shouldn't even affect your workout, it shouldn't affect any of those things, okay? So that's something that you really want to be doing, is compartmentalizing your trading performance, your trading results from the rest of your day, right? You don't want to be bringing that energy into the next trade, because if you do have that period of losses, you're automatically thinking about those results before you've even taken the next trade. And I've had that as well. You bring forward that energy, and then you're more likely to spot more losing trades by doing that way. So just completely, at the end of every trade, at the start of new trade, fresh slate, new position, you've got to approach it like a fresh trade and just do the same thing over and over again. Right, so now we know that situation is going to happen for every single trader out there. There's no getting around that. It's going to happen from time to time, right? In that situation though, what's important is how you actually behave and bounce back, and actually the things that you put in place during that time. So let me explain. And I often get the question of, right, do you backtest every day, every week? So what I'm going to do is link the 2 questions together here. What I tend to do is I don't backtest every day anymore. I used to back in the day, obviously, when I was learning the strategy and trying to get to that point where pattern recognition was at its peak, right? Trying to learn the strategy, etc., get better, recognize patterns. That's when you want to be using it, when you're learning and data collecting. That's the peak of backtesting. But now I'm at a point where I don't necessarily need to do that. I can always improve, but what I'm doing is, if the markets are quiet and I haven't taken a trade for 2 weeks or even a week sometimes, or I've had a slightly slower month in the markets where it just hasn't been as many trades, all I do in that period is backtest, right? So I'll invest 3-4 hours, 5 hours here and there on a weekend or on a weekday, and just invest that time into practicing my entries. Get back in the flow mode, get back into a fresh state of mind with my trading, and that just helps me when I'm live trading. Because if you do that, the next time a live trade comes up, you're just continuing the cycle that you've just done. You're just trading, right? But the problem is, if you haven't taken a trade for 2 weeks and you're slightly rusty when it comes to a live trade, you may miss something, you may miss the entry completely, you may be doubting yourself. Like, all these things have come up with me in the past if I haven't taken a trade in 2-3 weeks. So these are important things to actually consider. So in that time, that's when I'll backtest. So because obviously November has been very similar to that, I'm going to be today backtesting for probably 1 or 2 hours, getting back in the flow of things, probably do the same tomorrow as well. And then by the time the next trade forms, I'm good to go again. So that's what I'm going to be doing today. Quick tip for you as well, really important to consider and actually execute on. Right, all I'm really doing, like I said before, is keeping the skill set sharp, keeping myself entirely fresh, so that when I take another trade, I'm not rusty, I'm not second guessing anything, not that I would anyway, but it's just to keep the iron hot. So currently underway backtesting session. I've just been backtesting for 20 minutes or so, and now just continuing, and I've taken 3 trades so far. So let's just continue with this. So from a 1 hour perspective, we have a potential switch in order flow, not confirmed until we see a higher low form. So what I like to do is, obviously, a new change in trend will be essentially a new higher high and a higher low. So just waiting for that to be confirmed, but happy to be looking for potential buys in this situation. So looking for potential entries. Entries formed, so just looking to take the order. So I'm going to be placing an order at price here, stop loss safely below. I'm really not bothered about the tighter stop. I couldn't care less about that. I'm more fussed about keeping a safe stop below structure and protecting my risk. So entry place now, targeting buy side above here, targeting buy side, and then just playing the trade. So we'll see if this plays out. We'll see if price comes back to tag me in. Yeah, I'm in the trade. Sweet, in the trade. All I'm doing whilst being in the trade is basically just monitoring price action. That's all I'm doing from a lower time frame and a higher time frame perspective. So just looking at this area to the left here. Right, so 4 trades in, and once again, just going to continue like this. I'm just going to go, literally, this is euro dollar on the 1 hour chart, and I'm just literally just going to go ahead. Obviously I could have targeted buy side above here and stuff, but just literally playing the plan. I've got the plan, I've had the plan in place for a long time now. It's just about playing the edge. I know my edge, it's literally just about playing it. Like you're gonna get wins, losses, break evens. Like here, what was it? Obviously had a win here, took a loss here, trade idea was correct, but took a loss. Took another trade here, took another trade up here. Like all I'm doing is just playing the edge. It's very, very simple, but obviously on an individual trade basis, you can sometimes, especially if you're learning, you can get caught up into the individual trade outcome, etc. But what you really want to be doing is just focus on the process, let the edge take care of itself, try not to focus on outcome. As you get experience and enough in the market, you'll just overcome that in time, and just trust the process is what I'm saying. But yeah, just gonna continue with this backtesting session. And yeah, the good thing about this is that it's live price action as well. you know, I obviously can backtest on TradingView, and I have done in the past, and I've used different softwares, but this allows me to actually execute the trades ahead of time. You know, I can see the trades running, I can see what they're running profit. I actually have that data to measure as well. That's a good thing, because obviously when you're on TradingView, you can obviously go back and change things, and whereas on this, it's just a lot more accurate, and you're just playing that data and just letting it play out. So it's just, for me, it's just a lot better. So yeah, Forex Tester 5 if you want to check this out. But yeah, I'm just giving you 5-6 years worth of lessons compounded and simplified into one, so you can actually pick it up, try it out for yourself, because what's the harm in trying? Like, there's no harm if you try it out. If it doesn't work for you, fair enough, but at least you've tried, at least you give it a go. If it does work, perfect, it's a valuable asset to your trading toolkit, right? So give it a go. This is just what I've been through as a trader, this is what I've noticed other traders go through, and these are some valuable lessons I think that are really worth actually talking about. Overall, hope you got some value away from today's video. I'll catch you all in the next one. Have a good week in the markets.